When it comes to investing in cryptocurrency, there are two main strategies that investors can choose from: long-term and short-term. Each strategy has its own set of advantages and disadvantages, and the decision of which one to pursue ultimately depends on the individual investor's goals and risk tolerance. Long-term investing in cryptocurrency involves buying and holding on to a particular coin or token for an extended period of time, typically years. The idea behind this strategy is to capitalize on the potential growth of the cryptocurrency market over time. By holding on to an asset for the long term, investors hope to benefit from any price appreciation that may occur as the market matures and gains mainstream acceptance. One of the main advantages of long-term investing is that it allows investors to ride out the ups and downs of the market without having to worry about short-term price fluctuations. This can be particularly beneficial in the volatile world of cryptocurrency, where prices can swing wildly in a matter of hours. By taking a long-term approach, investors can avoid the stress and anxiety that often comes with trying to time the market. Another advantage of long-term investing is the potential for significant returns. While there is no guarantee that any particular cryptocurrency will increase in value over time, history has shown that the market as a whole has experienced substantial growth since its inception. By holding on to an asset for the long term, investors have the opportunity to benefit from this growth and potentially see their initial investment multiply many times over. However, long-term investing also has its drawbacks. One of the main disadvantages is that it requires a great deal of patience and discipline. In order to be successful with this strategy, investors must be willing to hold on to their assets through periods of market volatility and resist the temptation to sell when prices are low. This can be difficult for some investors, especially those who are prone to making impulsive decisions based on short-term market trends. Short-term investing, on the other hand, involves buying and selling cryptocurrency in a relatively short period of time, typically days or weeks. The goal of this strategy is to capitalize on short-term price movements in the market and generate quick profits. Short-term investors often rely on technical analysis and market trends to make their trading decisions, rather than focusing on the long-term potential of a particular asset. One of the main advantages of short-term investing is the potential for quick profits. By buying low and selling high in a short period of time, investors can generate significant returns on their investment. This can be particularly appealing to those who are looking to make a quick profit or who have a high tolerance for risk. Another advantage of short-term investing is the ability to react quickly to market changes. Unlike long-term investors, who must be patient and wait for their investments to grow over time, short-term investors can take advantage of sudden price movements and capitalize on opportunities as they arise. This flexibility can be a major advantage in the fast-paced world of cryptocurrency trading. However, short-term investing also has its drawbacks. One of the main disadvantages is the increased risk of losing money. Because short-term investors are focused on making quick profits, they are more susceptible to market volatility and price fluctuations. This can lead to significant losses if the market moves against them or if they make poor trading decisions. Another disadvantage of short-term investing is the potential for emotional decision-making. When trading in the short term, investors may be more likely to make impulsive decisions based on fear or greed, rather than sticking to a well-thought-out investment strategy. This can lead to poor decision-making and ultimately result in losses. In conclusion, both long-term and short-term investing strategies have their own set of advantages and disadvantages. The decision of which strategy to pursue ultimately depends on the individual investor's goals, risk tolerance, and investment horizon. Some investors may prefer the stability and potential for significant returns offered by long-term investing, while others may be drawn to the quick profits and flexibility of short-term trading. Ultimately, the key to success in the cryptocurrency market is to carefully consider your investment goals and choose a strategy that aligns with your financial objectives.